ladies and gentlemen, welcome to the show. Listen, I'm glad to have you guys here on this Friday, the 6th of March, 2020. Thank you for tuning in. Now, let's get started with the show. Let's turn the charts on right here and take a look. They're saying that the market liquidation will continue until the Fed does a 75 basis points emergency rate cut. That's what it says here on Zero Hedge. And in fact, I'm not sure if that would actually stem it or stop it at this point, and the reason why is what's the root cause of the markets going down is this coronavirus infection that's spreading through the world, and that's the root cause. And this is just a symptom. The stock market turning downwards and stuff is a symptom of the actual root cause of the disease that's affecting the world's financial markets right now, and in fact, affecting supply chains around the world. This is huge because we're not seeing the effects full on, of these supply chain disruptions that have already occurred. In other words, like take medications coming out of India, for instance, we haven't seen the effects of that yet. As that starts to ripple through the system, we're going to see shortages of medicine and stuff like that. And takes supply chains coming out of China. China's just about basically switched off at this point right now. And, an awful lot of parts for machines and stuff, if machines break down, and they always send for a part from China to repair the machine. You're not going to get those parts. But, inventories in the United States have to diminish of Chinese-made parts and stuff, before you're going to feel the actual ripple-down effect of China shutting down. So, in other words, it might be 6 months from now, and all of a sudden you go in to buy that part, and it's not available because China shut down now. Right now, the part might still be available in the United States. You need, say, to fix your tractor, because they have certain amount of inventories and parts in these parts distributors and stuff, But 6 months from now, that's when you're going to see the effect of what's happening right now. It's like a delayed reaction, see? So this is going to trickle down through the entire system over the next few months, these supply chain distribution problems that are being created by this virus, this novel virus in China. And so we're going to see the effects later. And the effects are going to be very, very drastic because China is the main importer, exporter. It exports to the world, many, many different things, rare earth minerals, all kinds of different kinds of parts, and they become the main supplier, like electronics, for instance, next time your phone breaks down, they might not have that particular phone available anymore, you might have to buy something else if you can get it. It might be hard to actually buy certain electronic goods and things like that. We're going to see the effects of what's happening right now a few months into the future. And this is what I'm trying to say, Let's take a look now at the silver price and see what we got here. We got $17.34 for silver. Silver and gold, are not moving like they should be moving in this kind of a crisis. It's kind of like a delayed reaction, sort of kind of like the delayed reaction that occurred with the stock market, In the early stages of this crisis, I told you it was going to fall over. I told you the stock market was going to fall out of bed, But it was a delayed reaction. For many days on my show here, I came on telling you guys the stock market is going to react at a certain point in time to this huge problem that's building in the world, this viral problem. And it didn't happen right away, it was like a delayed reaction. And this is the same thing that's happening in the gold and silver market. It's not taken off yet, and it's like a delayed reaction. And I'm expecting this to really do a moonshot. at a certain period in time, Uh, and it's when that realization comes in that everything else financially is collapsing and the Fed is actually trying to prop the system up by just monetizing everything. When that realization comes, and I think the day is coming, and I don't think it's too far away, as this contagion progresses in the world, as this situation grows exponentially larger, and yes, it is growing on an exponential scale, day by day. This situation is growing. It's not going away, it's getting worse, it's intensifying, and its effect upon the markets are going to intensify. And so what I'm expecting is panic moves into gold and silver at a certain point in time as a safe haven asset, especially when they finally dawns on them that they can print money to infinity on the other side of this. And the Fed's got two choices here: either print or let the system die. Well, if the system dies, then the Fed's going to be held responsible, and they're going to be on the side of they can't let the system die. If they let the system die, they're going to be in big trouble. And, if you have ever seen politicians, they'll always push things off. Politicians and uh, a certain type of person has that job, and intellectuals and stuff, they have this particular job in the political structure, and the Fed is similar. They're not exactly politicians, but they're, what's the word I could use for it? At any rate, there's similarities in the type of personality, and they don't want trouble. They want to try to go the easiest route, always the easiest route. And the easiest route in this case is not to let the system default, is to keep pushing the can down the road. Even if you got a big problem like this, it's just going to take more money. They're just going to have to print more and more money and inject it in to keep propping this up. And at a certain point, I think you're going to see a moonshot in gold and silver. But we're not there yet. Just like we weren't there with the stock market falling off. I knew the stock market was going to fall off. I was waiting for it. It took a lot longer than I thought before it happened, Now the same thing's happening with gold and silver. It's staying down a lot longer than I thought. $17.33 today on silver. And let's take a look at gold. $16.84 today on gold. It's up $12.30. Now you notice how gold is leading the way? Well, it's all about investors, and they invest in gold an awful lot more as an investment, as a safe haven investment, than silver. The first thing that comes to mind for an investor when they get scared is, we better buy gold. They don't say, we better buy silver. So this is why gold's leading the way. But ultimately, gold and silver follow each other. And so when gold goes up, ultimately it'll carry silver up with it. And when the rally really gets going good, you'll actually see silver take off a bit better than gold when the rally really gets underway. A lot of these guys out there think we've had the gold and silver rally already. It hasn't happened yet. It's still, the price is way down low considering where it should be. So $16.84 for gold. Let's take a look at cryptocurrencies today and see what's happening. Looks like 261 billion, with a Bitcoin dominant 63.6% and a price of $9,100 bucks. Looks like for Bitcoin today, and it's up, but it's not been going up big time, but it's starting to head back up toward the $10,000 mark for cryptocurrency. Let's take a look now at the Dow Jones, see what it's doing. It looks like 717 points down, 25,403, and so we're down 700 points today, 717 points to be exact, on the day so far. let's take a look at oil prices. Now, this is a big mover today. This is where the action is today, is in oil prices. 42.89 is down $3. That's a big fall for oil. 6.56%. Yeah, that's huge. That's huge. Now, we are in an oil-based economy, and I can't tell you that how deflationary it is when oil drops that much suddenly, you know? It's extremely deflationary. Let's take a look now at U.S. Treasuries. See, this deflation is what's going to lead to them printing. This deflation, like with oil, this is huge. This is a huge amount of deflation that just got flushed into the system. We're looking at falling yields on treasuries all the way across the board. I mean, we're getting down toward 1% on the U.S. 30-year, 1.28 it looks like. And on the U.S. 10-year at under 1% now on the U.S. 10-year. We're heading towards zero interest rates. And we're heading there awfully fast, guys. Let's take a look at the dollar index. Big fall in the dollar today, too. It fell over a penny. 95.78. We should see a rush up in the price of gold and silver. We don't see gold and silver moving much today, you know, even though the dollars fell off a whole penny. So listen, thank you guys for listening to this show. Like and subscribe. Give me a thumbs up. Catch you guys in the next episode. Bye-bye.